Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update back from out in Utah. And many of you were correct and guessed that I was at Sundance. It was a lot of fun, survived, no knee or leg injuries, so all good there. And just as a reminder, as you see on your screen each and every week, these are the stocks that we'll be featuring in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this video. All right, let's get to the markets. We take a look at the chart of the S&P. And by the way, we are doing this on Monday, took the holiday weekend off, so we have the advantage of what happened on Monday's open. We are ticking down just a little bit, and we had some economic news to talk about. On Friday, we had the Fed's favorite inflation indicator, the PCE report, that came out roughly in line with expectations. So nothing too severe there. In fact, the futures seemed to like that report last night. Futures were up big. And then as we started to move towards the open this morning, the futures came back down. And then we had the ISM manufacturing report, which went back above 50. It was 48.4 last week, and it came in at 50.3 this week. And so a key level of 50. Anything above 50 indicates growth or expansion. Anything below 50 indicates weakness or contraction. So bouncing back above 50 and the highest it's been for a while is showing that the economy is still hanging in there really well. Powell on Friday, when he was talking about the PCE report, was saying that we don't see any rush. The economy is staying strong. Inflation staying kind of under wraps. So there's no big rush into cutting rates. And the ISM kind of moved us that way. That pushed the futures down. The market's been down a bit this morning. We'll see where things close. We still have the afternoon to go. But coming back and looking at the chart of the S&P, you'll see that little bit of a tick down. However, we still are above the 10-day moving average, even at the time of this recording. The key level here is 520. We want to keep an eye on this 520 level. That was resistance going all the way back to towards the end of February, all through March. Towards the end of March, we broke above it and been hovering above it. So it's testing to see if what was resistance is now support. So as long as we stay above that 10-day moving average and above 520, I think we're still constructive. But now you have to wonder, is the Fed Fund futures going to start pricing in rate cuts later in the summer? Are we still going to be in the June, July timeframe? We were down about 50% chance as it is. So I think that's what the market's trying to figure out today is do we have to put the Fed rate cuts back further out into the summer or even into the fall? So that could certainly change things in the market. We take a look at the TNX for the 10-year, and you can see rates are popping up. And that's why, and that's what turned the market down this morning, is the fact that rates moving back to the upside. The TNX relabeled as I thought it might. And you can see that we're right here in this resistance area around 43. If we break above that, wow, rates could be off to the races. That would not be good as far as the market is concerned, and would be surprising, really. But it would be kind of a viewpoint that the Fed may be too slow to act. That's kind of what you would glean if we start to break above this resistance area and take off in rates. The dollar is also staying strong and moving up, and the chart of the dollar relabeled as I also had estimated that I thought that it would. We've been in this range around 104. We're trying to break above that area. Hasn't done so significantly, obviously, from the look of the chart. But if we start to get rates going back up, we start to get the dollar going back up, that's not going to be good or constructive for the equities markets for sure. So lots to keep an eye on this week. We get the ISM Services report on Thursday and see if that one comes in a little stronger than expected as well. Could add further pressure on rates. And this view that higher for longer is something we're going to have to deal with rates. Looking at the VIX, as you would expect, we've gotten a little bit of a bounce to the upside in volatility this morning. We're kind of coming up right to that lower trend line. Notice how we're just kind of testing that lower trend line where we're in this channel that we had discussed before. And broke below it, and we were hinting last week if we were going to break this 13 level and go down towards 12, 11, or if we were going to start and turn around and come back up. Well, at least for now, we're testing that lower trend line, that channel trend line there, with a little bit of a bounce in volatility. So, yeah, lots to watch this week. If we take a look at the Dow had been doing all right, but it's taking a bit of a hit today as well. We talked about this, but when we had this big run towards the end of the year, you saw that we went a little bit more than a 45-degree angle. There was certainly rotation going on in the markets. I think we could see that rotation come back again, broadening. If rates are going to stay up, it's going to hurt that Mag 7, the stocks that have been driving the markets. But if the market broadens out, if the rally broadens out, that's not a bad thing. That's actually a good thing. You don't want a handful of stocks driving the entire market. So we leveled off for a while, but now it looks like maybe we're trying to take a peek at moving a little bit more to the upside in the Dow. Again, would be more rotation going into some of the bigger cap names. We're still above the 10-day moving average, even though it's ticking down with the market. But we'll be watching the DIA to see if we can break above 400. So if we can get above 400, that might tell you that that rotation is occurring, and that's where things are going. We look at the Qs, as you can imagine, a little bit down today as well. Maybe not as bad as might have thought with the fact that rates are moving up. I'm kind of surprised that we haven't had a bigger tick down in the Qs yet this morning, but we'll see how the rest of the day plays out and the rest of the week. As long as we stay above 440, I think you have to be constructive on the Qs. We still have that wave 5 has not relabeled. And I just want to bring this up real quick. I was talking to the folks on our EWO Trader live show on the website, ewotrader.com, earlier that the question had been asked here during the U.S. market update in the past if that 5 could relabel to a 3 or if this 3 could relabel to a 5. Both of them happen, but relabeling this 3 on the S&P to a 5, it's hard to imagine where the wave 4 would be constructed in here. I still think that we have a better chance of seeing this 5 relabeled to a 3, but all things could change if rates stay stubbornly strong. And then perhaps that is the end of the wave 5 for a bit. But all still above the 10-day moving average, still above 440. Markets don't always go up. We need to consolidate for a while. And we've been consolidating right through this 440 level, basically on the Q since going back to mid-February. So not a whole lot of ascent there since the mid-February area. Looking at the IWM for an idea of risk tolerance right now, also in a wave 5 and right at that 61.8% fib level. 210 was the key. We wanted to see if we could break above 210 and start a new range. As you know, the IWM, all on economic reports today, likes to try to stay in 20-point ranges. 190 to 210 was the range, then down to 170 to 190. Now back up testing 210. We broke above it on Thursday, but couldn't close above it. Right back down here to 210. Also notice that a little bit of an ascending triangle being built here. Certainly a nice set of higher lows, only a couple bars here around 210. So I wouldn't call that the greatest descending triangle set up there, but it is one forming potentially. And we'll see which way we break here on the IWM. Do we break higher? Does 210 become support and we find a new level of resistance? Or is that it for a while and we're going to come back down and test 190? I think that'll have a lot to do with, again, how stubborn rates stay and how far the market, what it does to price in this viewpoint that the economy may be a little bit too strong for the Fed to cut rates in June. Looking at Bitcoin, had a good weekend, but backing off a little bit this morning. Went back up to 70,000, got above almost 71,000 yesterday, but back down around 69,000 as we speak. But look at this triangle that we have here. On Bitcoin, there was a report on the financial networks over the weekend. Somebody was calling for Bitcoin of 150,000 by the end of the year. I don't know about that, but we'll see if it continues out of this triangle back to the upside and continues this run. April 18th is not too far away. So we'll watch and see which direction this breaks. And as you know, we always marry Coinbase with Bitcoin, and gosh, the charts are pretty similar here. Also, a little bit of a triangle being formed here in Coinbase. These aren't big triangles, but they're triangles nonetheless. So, in the whole crypto space, something's getting ready to happen. Once again, is it a break to the upside into April 18th, or has the run already occurred and it's going to be a buy the rumor, sell the news when we get to the halving on April 18th? I think that's the thing to watch for on these. But Coinbase did have some negative news that came out on Thursday. It lost the first of those SEC trials on whether it's selling unregistered securities, etc. Everybody thinks this is going to take years to play out. It'll wind up in the Supreme Court. So a little bit of a takedown on Thursday, but I don't know that carries much as far as where we go moving forward. I think Coinbase continues to trade, being drawn along with what happens in the crypto world. As we talk about some of the stocks that you all have interest in, we'll start with Tesla. This one gets asked about all the time on TradeFinder. And by the way, just as a reminder, if you haven't signed up for TradeFinder, you can do it with the link that you see on your screen. And we do it live now. It's on 1 p.m. on Tuesdays now. So live show. And I'm going to start using that new Hub live platform with a live Elliott wave. So if you haven't gone to hub.com, HUBB.com, it's free right now. It's in beta form. I'm going to start using it on these live shows and showing it to you. So get yourself a copy of it. There's nothing to download. It's web-based. It's a great piece of software. People are loving it. There's a whole social aspect there where you can post your own ideas and people vote on them, etc. It's really cool. So go and take a look at it if you haven't already. So since everybody always asks about it every single week, I thought I'd show Tesla. And we're supposed to get the delivery numbers from Tesla this week. So this is going to be an important week for Tesla. We talked about this. We've been pretty much on top of Tesla that if it broke below 200, we're going to 180. If it broke below 180, we're going to 160. 160 is the key, though. If it breaks that, then it's the whole Katie bar the door scenario. I love it when you guys are using those references. I get a kick out of that. But a move down so far today. Looks like we want to come back down and test 160. We did get that oversold bounce. Talked about there might be a tradable bounce that came off of 160. There was. We went up and tested 180. It held as resistance. And so now it looks like we want to come back down and test 160. I would imagine that we wouldn't have any sort of a break above 180 going into the delivery reports. People are going to want to watch that. If you want to be long Tesla, I think you have to wait at least above 180 and more ideally above 200. Perhaps that's a little conservative, but we got the oversold bounce. That was the quick trade that was there. And again, resistance held. Now, if it breaks below 160, as you know, with the whole Katie bar the door scenario, 100 is probably next. And that goes back to January of 2023. So that's where you could have a pretty nice downside trade. So I think the pressure's on Tesla this week to deliver some sort of an upside surprise to stop this downward momentum. I know some of you are short, so you're probably rooting for disappointing deliveries. Looking at Boeing, y'all ask about this one a lot. And by the way, just as a quick reminder, each and every month this year, we're giving away a free L3 subscription at ewotrader.com that covers our AI-based impulse strategy, the volatility strategy, which is breakouts of triangles, and our AI-based time strategy, which is stocks that stay in a trading range where you can do sideways type trades. It's worth multiple thousands of dollars, so we're giving away one every single month, and all you have to do to register is leave a comment underneath this video. That automatically registers you, and good luck to everybody. People that are using it, the service have posted comments that they're very happy. So anyway, we're doing that every month throughout this year. And by the way, while I'm thinking about it, don't forget to hit that like button. Hit subscribe. Let's make a push to 50,000 subscribers. Go tell a friend if you like what we do here. And we had the push to 40. Now let's go to the next block. All right, on Boeing, kind of a similar story here to what we have with Tesla, where we had that support at 200. I made the comment that I don't know what other bad news could come out about Boeing. And sure enough, more bad news came. So we broke below 200 out of this little descending triangle here. And we came down and we did hold, at least for now, the support level at 180. And that's going to be the key. If we look at the 10-day moving average, we're right on that 10-day moving average as we're making this recording. So are we going to come down and test 180 again? So I think this is a range too, where Tesla's range bound between 160 and 180, Boeing here between 180 and 200. I think you just sit on your hands here and wait for a break one way or the other, perhaps a longer term view if you think Boeing's going to get their act together. But for the short term, I think you have to stay conservative and wait for a break above 200 with follow through, or a break below 180 if something else negative happens. Hopefully that doesn't occur. But if it does, then gosh, there's a big drop there. Perhaps another Katie bar the door scenario if we can't hold in this 180 area on Boeing. All right, y'all like to ask about TLT, so I thought I'd show you that. Doesn't hurt to go out on the longer end of the curve. TLT now is pricing on the 20-year, where the TNX is rates on the 10-year, and usually pricing and rates go in opposite directions. But we're seeing a little bit of a difference here on the yield curve as the pricing on TLT is going up. That would normally indicate that rates are going down, but rates are actually moving up on the shorter end of the curve and down on the longer end of the curve. So, yeah, we're starting to see some more signals of chinks in the armor all over the place as far as the economy growth, et cetera. I know that the economy is doing all right so far, but we'll see how long that plays out. But the yield curve definitely changing. We'll update the yield curve again next week as we see how the rest of this week plays out. The metals, we want to talk about the metals because gold is taking off to the upside. You can see this big move. We came down a little bit because we got a little ahead of ourselves at the open, I think, today. But you can see that there is some separation from the 10-day moving average. We had this nice consolidation through here around 200 and then just broke up vertically above here. But the separation from the 10-day moving average, maybe gold needs to take a little bit of a break. I thought I'd throw in a bonus here and show you SLV. Maybe it doesn't. Maybe it keeps powering higher. But same thing here with SLV. Open above this key resistance level at 23 on the open. We're trading right smack on it as we do this recording. And I want to see SLV break above 23. Maybe it plays a little bit of catch up to GLD with that vertical move. But this is such a point of resistance that I want to see it close above that today, and then likely some follow through tomorrow. The fact that we opened above it and we're already trading right at it or just below it means that we need to see the close on where SLV goes. And then to finish things off, as we always do, international market and the INDA is back at it again, taking off, running once again here. Came down, nice, beautiful test of the 50-day moving average, and then climbing back up. So now we have to watch and see if the INDA can break above this resistance area at 52. It tried to do it back here in early March, kind of got a little tired. So the test of the 50-day and now moving back up. But we want to see if 52 is resistance. Are we just testing that? Or do we break above that and the INDA or the Nifty go off on another run? So that'll be something that we're closely watching over the next week as well. So lots to talk about, lots to watch this week. Thanks for viewing. Hope you had a great holiday weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.